Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 18th of January, 2018, just after 4:30 p.m. Central Standard Time. Okay, nothing really happened in the energies today. The stock market gave back a big chunk of what it made yesterday. We're still seeing a debate, if you're watching the House debate everything right now, and let alone the Senate. I don't know how they'll get everything passed 1, 2, 3 to stop the government from shutting down, but it's still a possibility. Will it shut down, and what does it matter? Well, the gold market didn't think it matters that much because you were down again today. They tried to keep the dollar up, and that's a pretty broad range, and you came back down and settled on a weak note there. Most of the currencies were up against the dollar today. So in looking at the gold, you've gotten to a point where the market's gone into a pause on the weekly charts. It is down $7 for the week, so it did not continue getting through that other level on a closing basis yet. Remember, this is closes. 1345's been the high, but you did set back for the week so far. When you come to a daily chart, you see a better picture. This is a correction that we're in, but not a trend change at this point. Very frankly, this market can fall all the way down to the 18-day average for support and still look longer-term bullish. And I'm going to go on record saying that one of the numbers I'm looking at here is right through here, that 1313 level. As long as it's not breached, I'm going to consider this just a pullback in a market that is trying to keep its uptrend going. If you take a look, you can see that you've got higher lows, higher highs, and you're getting a bit of a correction in the market. You haven't broken the pattern of higher lows, higher highs. You've got a bullish crossover, which did produce a higher high on the market, but it's still at work. And this 18-day average is rushing up now to meet price. Now, how much is it going up each day? Yesterday it went up from there about $2.50. Day before about $3. So I'm not too far off, maybe $2, $3 it'll jump tonight. It'll be interesting to see if it does, and that's the level that should offer the first support in the market if it's attacked. Doesn't have to be. Get over today's high of 1338, and then you're going to take this swing line and move it there. Now that changes the game, because if you should reverse then back down from a higher level, you could end up nullifying the trend. I'm going to go though and keep you where I was saying without trying to confuse you. As long as 1390 is not breached, this market is set in place what we call a price count. And I read one of the comments that price counts never work. That's your opinion, and I agree. Sometimes they don't work. I don't know that anything that works all the time. However, a price count isn't a trigger for bullish or bearish. It's a trigger for the what-if scenario if a trend holds. That's all that it is. It gives you an idea. It is not a trading tool in the sense that you enter the market because it's in place. If this holds up, it is still saying the market's got a good shot into the 1350 and possibly for a big count near 1400. The market was not strong enough to get up to the upper Bollinger Band. Okay. So the pullback could happen here. And momentum-wise, today was the first real chip away in the armor of the bulls because you lost the embedded reading. In order to stay real bullish, this market has to regain that reading tomorrow. Otherwise, the odds do favor that price is going to meet wherever that 18-day average climbs up to. The two will try to come together. You get to see some of this on a 15-minute chart pretty clear on the current Bitcoin action. Forget the name Bitcoin. Forget that you don't like cryptocurrencies. That's not what this is about. This has turned into a trading vehicle. And as such, you get down to the lower band, the shorts are covering. You get to the upper band, the bulls are getting out. And that's the pattern that's taking place. And when you add these momentum indicators, you get to see, as you peaked out, it started down again. What's going on? That is the concept of momentum. And for whatever reason, this wild Bitcoin thing is all about momentum more than anything else. In the gold-silver ratio, we continue to see gold climbing on silver. The higher this goes, the more ounces of silver you need to get an ounce of gold, which means silver is relatively weaker than gold. When I look at the ratios here, you lost the embedded reading in GLD. So like the futures, I will not be surprised to see price and the 18-day average make a run at each other unless tomorrow produces something. Could be that maybe just maybe we don't get anything in the funding bill. There could be a number of things that the market decides is bullish or bearish, and we see where they go. But if you break down, I look for that to be the number. When we come to the GDX, it never did embed. The momentum turned down, and the market is backing away now. Now, 2345 is the 18-day average for support. In order to break the pattern of higher lows and higher highs, you'd have to take out 2327. Even if you do that, you've got two layers of support to pay attention to. You've got that 18-day average in the 100, and as this market reopens in the morning, the odds favor it's going to lose its overbought status and try to get back into what we call a more normal status. The silver market is fighting the battle that I've been a broken record on for a long time in front of you, stating that this 200-day moving average of closes is offering long-term resistance. The momentum has broken down in the chart. The pattern is still one. You made the higher high and a lower low. I think you can see that. And now what do you do from here is the big question. I would say if you get back over this high of yesterday, you probably captured who? The bears in the market. Take out 1680, you probably got the bulls in the market. And right here, there's just no edge. This is a hard market. In the copper market, you're oversold, unable to get too far away from the Bollinger Band here. Will you hit it? I don't know. If the market rallies, I look for resistance at 324. The interesting part of this market today, it was up a penny, is that China's growth came out way beyond what the traders thought. It was, I think, 6.8%, 68.8%. That's quite a bit of growth that they came out with, and it beat most of the expectations that were out there, yet the copper didn't do much off of that. In the platinum market, you still have the pattern of higher lows, higher highs with the embedded reading. That's all still bullish, but it is getting a little long in the tooth up here. And in the palladium market, once you lost the embedded reading, right when this occurred, as you get down here, you had the 78 reading. That's why unless you gain it the next day, you go into what I call that wishy-washy part, and you take a look. Tell me that that's not what you've done. You haven't really gone anywhere one way or the other, and that's because momentum has been pointing down. Yet, you still have the pattern of higher lows right now and higher highs. So the bulls still have the bias up because you're over the 18-day average. The swing line's up. That turns into a downtrend with lower highs, lower lows. If you take out 1089 and whatever yesterday's low was, and that was 1089.20. So if that's taken out, then I'll look for that 18-day average to be the next setup. In the dollar index, you had a few days where you got underneath here, the lower Bollinger Band. You came back yesterday, closed just a fraction over it. You tried to make a higher high today. You didn't go anywhere, and you've got an embedded reading. This market still looks to me in the bear camp. I will be surprised if you can't get down to that lower Bollinger Band. We'll see if it can do it. So you put it all together, a pretty interesting market. We'll see where everything goes for us. I want to remind you of our futures trading kit. And in our trading kit, what you're able to do is get our charting software. We have two types. We have one that you download on your computer. The other is computer-based, so you can just go online and play with it. And it's quite amazing as to what it does. All of them have our market research that can come in through them. And yes, if you get a trial or you're a subscriber to my research, it all comes in there. How do you get our trading kit? Call us. Go to our website. You'll see a carousel of free offers. Click on that. Click up here if you're interested in our information. If you're watching me on YouTube, it'll take you right there. Or underneath us. It says on many sites, click here for Ira's free information. Go with that. I'm Ira Epstein. Thanks for watching. Keep your eyes on what the Senate and the House do. Obviously, that's going to overwhelm everything we look at tomorrow, and the impact of it will be what drives markets. Take care.